Why are gold and silver prices rising? Gold and silver have long been considered safe haven assets, meaning investors tend to buy them during periods of uncertainty. In recent years, we have observed strong upward movements in both metals. Let's examine the major economic forces behind this trend. 1. Inflation and declining purchasing power. One of the most important drivers of rising precious metal prices is persistent inflation. When inflation increases, the purchasing power of paper currency falls. As a result, investors look for assets that can preserve value over time. Gold and silver are historically viewed as inflation hedges. Think of it this way: if everyday goods become more expensive, people want assets whose value rises alongside prices. Precious metals often fulfill this role. Key takeaway: higher inflation, weaker currency value, higher demand for gold and silver. 2. High government debt and fiscal uncertainty. Many major economies are carrying historically high levels of public debt. Large deficits raise concerns about future tax increases, currency devaluation, long-term economic stability. When confidence in government finances weakens, investors shift toward assets that are not tied to any single government. Gold and silver fit this requirement. Key takeaway: rising debt, declining confidence in fiat money, stronger precious metal demand. 3. Interest rate expectations and monetary policy. Interest rates strongly influence precious metal prices. When interest rates are high, investors prefer bonds and savings accounts. When markets expect rate cuts, the opportunity cost of holding metals falls. Even when rates remain elevated, expectations of future easing, particularly by central banks such as the Federal Reserve, often push gold and silver higher. Key takeaway: lower or falling expected interest rates. Gold and silver become more attractive. 4. Geopolitical tensions and global risk wars. Trade disputes, sanctions, and political instability increase global uncertainty. During such periods, investors prioritize capital preservation over high returns. Gold, especially, is viewed as a crisis hedge. Silver often rises alongside gold because it shares safe haven characteristics. It also has strong industrial demand. Key takeaway: more global instability, more flight to safe assets, higher metal prices. 5. Central bank gold purchases. In recent years, central banks across multiple countries have been increasing their gold reserves. Motivations include reducing dependence on the US dollar, strengthening balance sheet resilience, diversifying reserves. When central banks buy gold in large quantities, they create sustained upward pressure on prices. Key takeaway: institutional demand amplifies upward price momentum. 6. Industrial demand for silver. Unlike gold, silver has extensive industrial applications, including solar panels, electric vehicles, electronics, medical equipment. The global transition toward renewable energy and electrification is significantly increasing silver consumption. Key takeaway: rising green technology production, higher silver demand, higher prices. 7. Currency depreciation and dollar weakness. Gold and silver are priced globally in US dollars. When the dollar weakens, metals become cheaper for non-US buyers. International demand rises. This dynamic often pushes prices higher, even if physical supply remains unchanged. Key takeaway: weaker dollar, stronger price.